So I guess maybe we'll start with a round of intros. We'd love to hear from you guys, who you are and what you're trying to build and maybe how you got here in the first place.
Hey everybody, my name is Josef. I'm the founder of Pawn, one of the we'll collateralize any token type of protocols. Yeah, I mean, I've been in the space for a bunch of years. I've spent the last 4 years at the Ethereum Foundation, mostly worried about the protocol layer itself. But I've been involved in this cypherpunk community, being a lot around crypto natives and people who just live in the digital space. And obviously now with NFTs there's more adoption to the entire spectrum. So kind of now enjoying people coming to the space and trying to build something useful for them as well.
Guten Tag, everyone. So my name is Diego. I founded a product, not really a protocol at this point. The name is Gradient. Essentially, it's the idea that, I like the notion of, financialization of everything. NFTs, I think it's more exciting saying, what if we find, the finalization of just all the assets. And Gradient at the core, began with this dream really of, what if I get a loan against my JPEG? But we realized that there's some other interesting ways to think about the problem, closer to, just deeper down the capital structure. And so Gradient at the core, ended up becoming a bit of an underwriting protocol. It's building infrastructure that just allows people to shift risk, which goes, not just NFT lending, but really just shifting credit risk and going from NFT lending to hopefully in the future just fully under collateralized lending. Yeah, so that's Gradient.
Hey everyone, I'm Jen from NFTBank. I heard a few folks talking about NFTBank, so honored. I lead product there, and then we mostly talk about NFTBank in terms of price estimate provider, but beyond that, we use our own price estimate engine to build portfolio management service. So we have our web and mobile, so there's a pool of our users who manage their portfolio of NFTs through our platform. So looking forward to talking to you more about what we do.
Hey everyone, my name is Jonathan. I'm a co-founder at NFTfi. I'm covering for our CEO, Steven, who couldn't make the trip over from South Africa. Thanks for putting together this panel. I think NFT finance is a topic that's highly underrated. And we launched 2 years ago. It was a very lonely place for quite a long time. And it's very exciting to see now all of these projects coming up. NFTfi is a company actually building NFT, decentralized, trustless NFT financialization infrastructure. And our first product is a loan marketplace for NFT collateralized loans. It was the first one, and it's still by far the biggest one. We've done over 12,000 loans, about 190 million in loan volume. Our vision really is to become a settlement layer in this space, and we have stuff way beyond loans planned, but we can chat about that later.
Awesome. I guess we'll start some questions. So first thing, you had a great chat yesterday about the evolving methodologies in the space, right? It first started with P2P in 2019. With respect to that, we'd love to hear more about some of the biggest challenges that you guys are trying to tackle and why you chose to tackle it in the way that you did.
Yeah, so if I may, I want to maybe talk about the challenge that we're all trying to solve, really, because I think knowing NFTs and you guys being here, I think there's little doubt that this technology has insane potential across industries, and I think the biggest problem is that we're a tiny industry. So I think what all of us are trying to do is kind of to help the mass adoption of NFTs by adding financial infrastructure. What financial infrastructure does basically is it helps the NFT space reach its full potential. It does it in two ways. It makes the NFTs more valuable for the people in the industry at the moment, and it brings new folks into the industry. So it makes it more valuable for folks in the industry already by unlocking new value flow. So if you can now take out a loan and then take that capital and yield farm with it or do something else with it, that makes it more valuable for you. And what we've seen is that a lot of that unlocked capital is actually staying in the industry. So you take out a loan and then you buy a new NFT, and that kind of increases the GDP of these economies that we're building here, right? So financialization is very good for the current space. It also creates a lot of opportunity for new people to come in, right? So for example, if you can rent out via one of the renting protocols NFT land, right? That might attract some folks who basically want to build an NFT rental business, like real estate, businesses do in the real world as well. It also opens the door, the floodgate really to investors, right? There's a lot of capital waiting to get into this space, but you can't really get into this space if there's no capital efficient ways to deploy that capital, right? So for example, there's a MetaStreet protocol, if you've been there yesterday, they kind of tranche risk in lending protocols and then offer it to investors who have specific risk return profiles. So basically, NFT financialization infrastructure also opens the floodgate to incredible amounts of capital. So these are some of the ways I think how we all try and kind of help solve the problem that we're a super tiny space, but the technology has this insane potential.
Yeah, I think I can build on what Jonathan said. I think there's been some good momentum in terms of activating the lending with NFTs. But I think what NFTBank has been providing as a contribution to that ecosystem is the price estimate. And that serves as a basis for the asset value. And then people can take the appropriate loan to value amount and then assess whether the risk exposure that the lender is taking is appropriate. But I think we haven't yet gotten to solving the risk management piece at its core. So when people take out loans in the beginning, they only assess the value at that timestamp. But I think we all know how volatile NFT is. And we want to be better at how we can appropriately assess the risk when it comes to the default potential towards the end of the term. So I think that's something that we've been thinking a lot about. And then I think what NFTBank uniquely can provide in terms of that is actually leveraging our pool of users that I mentioned, like kind of separate from our price estimate capabilities. We have many users who actually come to NFTBank to connect their wallets, and then their wallets essentially become users in its truest sense. And being able to understand users gives us the potential to actually understand the risk potential related to that person. And then by being able to understand their behaviors and then the trading patterns, we can probably assess the appropriate risk and then manage it that way. So this is something that we're exploring, and then we want to be able to contribute uniquely in that way. Yeah.
Yeah, I gotta say I agree. Okay, I think that makes a lot of sense. I think at the core, lending, especially NFT lending, has a risk problem. At the end of the day, is somebody wants to get a loan against their JPEG. What size of how much money am I going to give them, right? You give me an NFT, I have no idea how much it's worth without myself having to sell it. So the question is, you give me something, what do I give you back, and in what terms? And those terms are obviously determined by the risk of the collateral, which is how much am I going to sell this JPEG for if the guy defaults, if the guy does not pay back their loan. And so I think that that's probably, if you were to narrow it down, like for me, my experience just working in this for like some time now is, you always end up trying to do some form of risk management. And, I got to just the epiphany in a way, which is not really an epiphany, but it's really realizing that like, I think the actual problem that we need to solve first is really at the end of the day, NFT lending, in my opinion, is an underwriting exercise. It's a question of, if the NFT sells for less than X, if the loan, if the lender makes loss, who's going to end up holding the bag? Is it going to be the protocol? Is it going to be the peer who lent out the loan? Who is it going to be? Is it going to be a third-party insurer? And so for me, yeah, it's about how do we find out, how do we create a system where, like the NFT is going to sell for less than the loan very often. The question is, who's going to end up holding the bag? And how do we incentivize people to hold these bags? How do we incentivize them to take this? How do we incentivize people to buy the risk behind NFT loans? And so there are interesting ways to think about that. Credit derivatives are very interesting. In traditional finance, the way they tackle this for under-collateralized loans is using, for example, credit default swaps. The question is that many of these things don't really extrapolate to crypto for a variety of reasons. So we get to the territory of where I feel like we're missing key primitives, key primitives that allow shifting of the risk on loans which do not exist. They're non-obvious, And so for me, it's hard for me to picture NFT lending scaling well beyond, NFT lending, I'm gonna be honest, like I don't think JPEG lending is that exciting. I think the real bet is like, just getting loans against bonds, collateralizing physical assets. It's well beyond the pictures, And the only way that I see that kind of thing scaling is with proper risk management. In other words, primitives that do the work for us.
Thanks. Well, before I get to the question, just a little shout out to Dialectic, our investor. Well, this is a true value add. Like speaking of value of NFTs, thank you so much. Maybe to kind of like not counter, just like express my like a different view. What to tackle? Like who is going to carry the risk? I mean, like mostly in today's like crypto lending, like the borrowers take the risk, and I think it would be fair if like the lenders take the risk, because then they will price these assets like more accurately, and there will be less hype overall if they are exposed. So I'm totally against like zero exposure from the lending perspective. In terms of challenges, I mean, quite honestly, like seeing you all here and like talking to a lot of people at NFT Berlin, I'm so optimistic. I mean, like I don't want to go as far as saying like there are no challenges. I think there are some, but seeing like how the industry evolves and like talking to a lot of people who, don't come from the crypto technological background, like entering the space these days, I'm excited. I mean, like this space grows at such a pace that I couldn't imagine like 3 years ago. So in terms of like adoption, like our whole point is like we are building for crypto natives. We are building for like people who are in this like digital economy, who see value. We don't want to convince anybody. Like we don't want to convince the the retail that like these things have any value, because in my opinion the industry is so big that it can sustain itself, and you can have like crypto native business models, and we are seeing this with a lot of the protocols, DeFi protocols in the space, especially on Ethereum, but many other chains as well. So for me, this is just like continuation. If there is a challenge that I kind of like increasingly see, it's kind of having like a lot of bullshit being sold to the retail. There's like a lot of so-called like trustless protocols that in in the background they're just like traditional like centralized things that are just like using the same phrases, the same words, but they are nowhere near kind of like these trusted setups that this industry originated from. So that I feel as the biggest challenge of like how do we actually tackle legitimacy in the space.
Sure. And then you guys also touched on building NFT infrastructure, not just for NFT collections, right? It could be real world assets, bonds, for example. How are you guys exactly preparing for this like new wave of innovation or like availability of these assets, in the next short term, 6 months to 12 months?
Should we do like everybody like say something, or if you have a point, just go ahead.
Oh yeah, I do. Yeah. So at Gradient, like the idea, I think that my role as like trying to come up with this thing is like not trying to come up with what makes the most sense now, but rather how crypto is going to be looking like in 2 years, or in 1 year, or in 3, 5, 10 years. And again, I don't think that JPEGs are going to be the biggest use case in 5 years. Again, the most exciting use case is collateralizing not just financial assets, but again, it's the financialization of everything. And crypto, by tokenizing physical assets, for example, could serve as a pathway to, for example, get a loan against just, like could be, for example, let's just choose just a physical asset that we manage to tokenize, getting a loan against that, and then reinvesting that loan to get, reinvesting it in like Yearn or, for yield, and just getting passive income for, the idea they can get passive income for like, in principle, like just any asset. And I think that's what NFT finance, in my opinion, it's eventually going to be about. And so, Gradient is just building towards that vision, building towards infrastructure that is, has no, infrastructure that it works for JPEGs, but works especially well for just everything else. Yeah. What
was the question?
How you guys are thinking about, catering to real-world assets represented as NFTs in the short to medium term?
Yeah, I think in general, I think we also think about long term, and then I think when we think about how we can do that best is I think like just a lot of like trial and errors basically, right? And I think there's a lot to learn from the TradeFi system, and then like how the real world asset works, and then like we'll just have to experiment, and then it's actually a funny story. Like I lead product at NFTBank, and then I invest so much of my time in partnerships. And the reason for that is because I think the faster way to experiment as a community is actually to just kind of like leverage each other's strength and then be able to like build more stuff together. So that's like how we've been approaching. And then I think we've talked to pretty much everyone here on the stage, and in addition to that, many more other partners to try to help like solve the critical pieces. And then, yeah, like we'll build the building blocks individually, and then kind of like see how they put together as a group.
Yeah, I can add, and I wanted to add this in the challenge section before. I think it's not easy to get the product right in this space. So to build towards product fit, which is ultimately where we want to be, is not very easy because it's not trivial to build loan products, for example. So how we try and anticipate what's coming and to make sure that our product is suitable for what's coming is we first try and anticipate what kind of subverticals or what kind of industries, digital or not digital, NFTs will touch next. So we're trying to sort of anticipate the, like an adoption curve and like which kind of other subverticals are sort of cocketing with the chasm, and then we do a lot of research. So for example, before we built the current loan product, we did a loan taxonomy. Like we had this, and we were like, what kind of loans are out there in the world and for what reason? And there's like 40 different loan types. And so we, for example, last year, and then we matched that with our expectation, what's coming next. So last year we worked on an amortized loan product, and we invested like 2-3 months of token engineering in that, and into that, and we simulated that, and we had a crazy auction mechanism and all sorts of stuff. And then we spoke to a couple of folks who are tokenizing real estate and are interested in collateralizing these assets, and then we realized that's way out, right? So that's not going to be there like this year. There's gaming is coming first, and music is coming first, and so we don't need amortized loans really, right? So we want to like see what is coming next, what do these users want. You also look into traditional industries, right? Because like traditional industries, I mean, they're not all stupid, right? So it makes a lot of sense to look at how do people underwrite risk and what kind of products they've come up with, because the users in these economies want these products. That's, I think, what we do. Yeah.
Yeah, like overall, I totally agree with kind of the long-term view. I'm also not so much worried about like what's going to happen in like 6 months or 2 years, because ultimately we are building something which will be super useful in 10 years. That's whole our assumption and kind of the motivation for building stuff. Like you see the already like the digital economy that's being created around like games or virtual lands. Like now for us that's new. Like for people who were born into reality where this was normal and this was a novelty, that's when the big things happen. That's where you actually like will see the utility of the stuff that's being built now.
Yeah, great points. And Jen, you were mentioning like partnerships and how you guys have kind of already talked to each other. Would love to hear more on like what partnerships or integrations you guys have already established, whether it be with each other or other products in the ecosystem, and how exactly has that played a role in the success of your protocol?
Yeah, I mean, like our view is like we are all super early, obviously, so we definitely want to collaborate with anyone, even like if we are in the same market, because like we think this is still like a super blue ocean situation. Like there is so much space and like so much innovation, so much like niches in what we are kind of targeting that it's one thing that made me excited about crypto in general is this like mindset that like if someone who builds something similar like wins, then I win as well, because like we get this like legitimacy together, and I still feel we are in the same setup. So I'll be happy to talk to anyone, and ultimately I feel like crypto is still about the integrations. Like you cannot build everything yourself.
Yeah, I concur with those points. I think the way we're thinking about partnerships is, as you were saying, finding PMF is not easy, and I'm not a lender myself. I'm not sure about you guys, but like, as soon as the protocol launches, I'm not gonna be the main underwriter. I'm not gonna be the main guy doing, like the analysis and like being, like I'm gonna just, lend out some money for this kind of collateral. And so where I think partnerships are the most interesting is partnerships as a vehicle to find PMF. Partnerships as a way of setting up structures, partnerships as a way of creating synergy that allows the protocol to iterate faster towards, just using partnerships for, you could think of it as market discovery, just finding, the right needs of different people, and as a way of also like settling, just direct collaboration lines. I think those ideas are very key, and for us, they go both ways. They go for the lenders, the underwriters, like the underwriters, the guys taking the risk and doing the analysis, and the guys being, am I getting enough money for this risk? Is this sustainable? Is this efficient? But it also goes, in the opposite way, which is for the borrowers. So at Gradient, like these things are not public, but we've been working with DAOs and collectors as a way of making sure, does our thing make sense? I don't know it for a fact. I'm not a collector. And so it only makes sense to do so, by talking to them. And yeah, partnerships so important.
Yeah, agree with all the great points. Maybe I can share a little bit more about some of the other partners that we've been working with. Obviously, like lending, I think, has been taking up the front stage. So a lot of lending partners, NFTfi, one of our earliest partners, you'll be able to see our price estimate being placed there in the loan. And then in addition to the loan partners, we're also working with some of the other derivatives-based protocols. So one example is injective protocol, where we provide our floor price feed so that they can develop a perp. So we've been experimenting with BAYC perp with them. And then in addition to that, we're also talking with some of the other options makers. So Nifty Options, we'll be talking with Putty. So I think a lot of the financial instrument builders are interested in using our price estimate as a basis for what they're trying to build. So continued iteration, and obviously in addition to the builders, we closely partner with some of the loan providers as well. One big one being Goldman Sachs, who had a great presentation earlier on. So they've been using our price estimate to do auto loans. And they actually are great partners, not just like one way us providing them data, but also they give us great feedback in terms of what works and what doesn't work, how can we further improve for the purposes of loan. So it's like almost like a very like virtuous cycle where we kind of add value by giving them our data, and then we get value by getting feedback. So yeah, it's been really fruitful in that aspect. But in addition to that, we also try to kind of take the burden ourselves as well as in terms of understanding our partners. So we also try to originate our own loans so that we understand more in a first-hand basis some of the pains of our users and partners. So yeah, it's definitely one of our big focus, and we'll be exploring more. So if any of the partners out there want to talk to us, we're here. So yeah, we'll be happy to talk.
Yeah, I'm just going to reiterate what also Josef said. I think it's such a small family, the NFT finance space. Everybody's super excited to kind of share, and to there's not really a competitive spirit. It's such a huge industry. If nothing goes wrong, that there's enough for everyone. It's a blue ocean for sure. So we as a marketplace, we have a lending side and a borrowing side, and like we think about partnerships in these dimensions. So on the lending side, and overall, the goal is to provide the most seamless collateralization experience for the users, right? So we need capital on the lending side to drive down APRs, and we've seen that in the stats that if you've seen that yesterday, the more supply there is, it drives the APRs down, which means like you can get a loan, you can get cheaper liquidity as an NFT holder. So that's why we're interested in pushing the lending side. And how we do that is we work with algorithmic lenders. So we have a full feature API. So there's lots of people who run their own bots, and they don't actually use our interface. They just lend directly. They run different strategies. I think currently I would say like 30% of our volume is already algorithmic, and then there's other partners also on the liquidity side, like MetaStreet, if you've seen their presentation, who are more like a liquidity scaling protocol that use the financial NFTs that we produce as a protocol, if you know NFTfi. So we turn NFTs, these loans, into financial NFTs that then sort of get aggregated by liquidity scaling solutions like MetaStreet and sold on to investors. So these kind of integrations and partnerships on the lending side are super important. On the borrowing side, we focus on anybody who has big distribution in the NFT space, meaning marketplaces, for example. So if you're an NFT marketplace, you can integrate via API, or also we have a widget solution which basically allows you as an NFT marketplace to just basically have a higher lifetime value of your customers, because you can get a revenue share if these folks then take loans out on NFTfi. But there's also information aggregators like Zapper and so forth. So on the borrowing side, we try and integrate with folks that have distribution in this space, and then try and create a win-win situation.
Yeah, that's awesome to hear. I think partnerships is one of the most important.
Can I quickly add, sorry, I forgot, and we work with NFTBank, and where that fits in the picture is we want to make it as easy as possible for lenders and borrowers to come to an agreement, right? And while we're a peer-to-peer marketplace, so we don't use pricing data anywhere sort of structurally in our protocol. We still provide it to the users on the asset page, so they sort of have a convenient experience in judging what are good loan terms and what is not. And that's where this partnership is very valuable.
Yeah, it's great to hear that you guys are working together and really open to talking to each other. Speaking more on kind of like partnerships and integrations, one of the most important aspects of crypto is like permissionless composability. Looking forward, what are some projects that you'd like to see built, that use your protocol as kind of base infrastructure?
Just start. Are we? Yeah. So there's a ton of stuff, and like we are also again kind of like coming from just like the open source background. Like we also build a bunch of tooling that we hope like other people in the space are going to use. Like our contracts are completely open sourced, and there's like a whole lot of stuff around like bundling different types of assets. Like there are projects like Charge Particles and like many others, and we also have like a token bundler and that kind of stuff. So I mean I'm kind of like more focused on the smart contract layer, where there's a lot of space for innovation. I mean, always. But then there's definitely like more. The more data, the more pricing data you have, like the better price assessment you can do. So like even digging the data that's available, like comparing assets like across different asset classes and that kind of stuff. That's all super useful. And I see that stuff being built within the ecosystem, but obviously, like you cannot create that overnight. So I guess like there's always need for good like data streams, good like data sources, and evaluations. There's definitely need for like creation of secondary markets for like these loan positions, for instance, yeah, I mean, the endless topic of like improving user experience. That's also a point where I wish like things like EIP like 3074 was kind of like pushed through, so you could like remove all of these like blockers for the user to just like interact with the protocol. So yeah, I mean. Not super concrete, or maybe too concrete at some points, but again, this is a huge blue ocean, and the entire tool stack is just like waiting for someone to come and like start building useful stuff, and that's the exciting part.
Yeah, so I would say they're probably classified into two categories. The first one being obviously, how is it the experience for the borrowers? You want to abstract, as much complexity as you can away from them. Obviously you don't have to do it like point is, the more ways you have to of abstracting the complexity of taking out a loan, the easier it is to cater to retail and to expand, to fully scale the system to like the maximum amount of collateral that it can eventually take on. And so I think that's very important. That's something that we've not been focusing on because it's something that obviously will come later down the line for us, at least. Though where I think is the most, where the most work should be put is in this other category, which is like, how do you create more, how do you facilitate things for the lenders? And so here's where it gets really interesting because, for example, peer-to protocol, obviously it depends on the protocol, maybe liquidity pool based, it may not. Or you may just have peer-to-peer protocols, and in any case, like this, there's like somebody who ends up taking the risk. Either it is the LP, or it is the lender in a peer-to-peer model, or it is, for example, the token buyer in a peer-to protocol. Kind of just design without LPs. So there are many ways I think in which that thing could be improved. For example, one of them is using, just AI prediction, using TWAPs, for example, as a way of trying to see what the underlying collateral is worth. If it's the point is, there are many. I think that's just absolutely key. In my opinion, there are going to be just way more things to scale up. Like the risk management. For example, like targeting classes of assets at the same time, or for example, taking exposure at limited parts of the price line. There are just many interesting ways of like making the risk more discrete, and by doing that, you create a bigger menu of options for underwriters. And that, for me, it goes back to like just literally the first question. I'm a true believer that like this whole thing is like the main problem that all of us has is a risk management problem, and like I think that's really where where most of the work is, in my opinion, needed. And so definitely, yeah, better risk management devices are needed. NFTBank is one of them. TWAPs is for example, several protocols use them. Perhaps concentrated liquidity could be interesting for just working that idea of separating the price line into different units. So yeah, I think it's very important.
Yeah, I think obviously like risk management based protocols would play a big role. Really looking forward to them coming up. But I think in addition to all these other financial instruments, what we're really interested in is actually like the ecosystem of users who can actually kind of build like a human layer on top of these like financial protocols. So one example would be like the emergence of fund managers who can actually leverage different types of vehicles to kind of appropriate the right amount of like risk exposure and then the return profile. And this is something that we're actually directly exploring with our pool of users as well, where many of them actually run their own funds using NFT portfolios. So I think this is something that we will directly and indirectly look to kind of have coming up in the future.
I wanted to maybe add something about education, because I think it's, so on the one hand, we need like more sophisticated people to come into this space, because the stuff that we're building is like super complex. We believe that the composability in this space will be mainly driven by the encapsulation of these financial agreements in NFTs themselves. Like upon also, you also represent your loans as NFTs, right? And I think the composability will be driven by these discrete sort of elements representing financial agreements, and the design space is really completely open but quite complex, right? So there's already a derivative protocol building on top of MetaStreet, for example, right? So MetaStreet is building the super capital efficient secondary market for these promissory notes, how we call them, and then there's already a derivative protocol like building on top of that. So, and that's kind of stuff that you can't really do if you haven't, if you don't have a financial background, if you don't have any sort of risk experts. So on the one hand, I think we'll see like an inflow of like people who who have built this complex stuff. And on the other hand, and that's something that we experience almost every day at NFTfi, we need to do a much better job in explaining these products to users, right? We saw yesterday the penetration of NFT finance in the current NFT space is sub 1%, right? So there's very few people knowing about these possibilities. And our experience is that once they get to know about these possibilities, they're like often like, holy shit, like that's possible. And there's some people who like tripled their holdings and who, like, for that, it's really life-changing for people to make that experience, but we're not good enough yet in explaining that, I think. So on the one hand, we need to be better at explaining it to the people actually using it. On the other hand, we need to manage that complexity and learn how to underwrite risk in a better manner.
Just one last point that I realized, so most of, and this is tackling specifically NFTs and specifically, I guess, art NFTs. Most of the metadata APIs suck. They suck to work with. If you're looking into providing some utility in space, I think there's definitely a huge potential here, especially if you can base it on IPFS or decentralized storage and decrease the loading times for that. Still utilizing the fact that the data that you're actually pulling is from IPFS or Swarm or any other such a solution. Otherwise, I guess all of the solutions eventually are forced to build their own caches, which is very suboptimal, and it's nowhere near the narrative of actually being able to use those applications yourself without the need of the intermediary. So that's kind of the huge missing component for me.
Yeah, and we've talked a lot about kind of the lending side, risk management, and then Jonathan, you briefly mentioned bringing more users in the space. We'd love to hear more about how each of you guys are kind of thinking about making it easier for the users, whether it be through content or posting on Twitter. How exactly are you guys thinking about that and educating them of the possibilities of what you're building, for example?
Yeah, I guess our approach in this may be a bit specific because again we are targeting these crypto natives. I'm super grateful for where the industry stands right now because it's filled with a highly educated people. And I think I saw a tweet yesterday where Sam Altman was speaking to someone, I'm not sure in which room, but he said well, very likely the users of our stuff are much more educated than the regulators looking at the stuff. So I'm grateful that we have these users, right? I'm grateful that there are people who understand these things and we don't have to educate them all that much. But obviously that's now. That's this is the little bubble, and I don't want to stay within this bubble. I mean, eventually I want to see more and more people coming into the space. But yeah, so initially at least, obviously, there's a lot of education that you have to do in terms of kind of teaching people how the protocol that you've built, how the service actually works, what are gotchas, what are the risks associated with using these services, etc. Yeah, for me, I guess the big educational part, and again I'm grateful for other projects in the space who already do that work, which is definitely important for kind of the decades to come. For me currently, the retail education isn't really the key point here.
Yeah. Hello. Okay. Yeah, education. I think obviously it's so important here. I think there are many ways to approach this. Again, I think it's a very good point. Just you end up at the point where who are you gonna cater? Who are you aiming for? Are you aiming for crypto natives or people beyond that? I think it's realistic at the moment to at least us, we're focusing on crypto natives as the thing develops, and the way we're kind of an interesting way to think about it is through the partnerships, through announcing, for example, certain massive loan was taken on this kind of collateral through the protocol, or a given DAO is now collateralizing their holdings as a way of, for example, paying as a way of funding the income of their members. We think that perhaps the most interesting form of education is just by example. And it boils down to how do you get the product out there? How do you build stuff that has PMF, and then using the PMF as an advertisement? That's one way.
Yeah, I think for us, we sit at a unique position where we can kind of leverage our own product to educate. What I mean by that is people come to NFTBank to manage their NFT portfolio, right? And what they're looking to do there is not only check the value of their portfolio, but also try to increase it. And in doing that, we can kind of take them along our journey where we have our partners lending protocols kind of be available as an option for them. So we're actually building our mobile product where the users will be able to come to their portfolio, and then with the NFT that they hold, they'll be able to see different options where they can either lend on NFTfi or like Pine Protocol or any other protocol to get loans based off of their NFTs. And as more financial products come on board, we'll be able to nicely kind of position this in the interface, kind of like fit it into the mindset when they were actually looking for like to increase their portfolio value. Like we provide more options to enable them to do that. So I think that's a pretty seamless way of kind of onboarding them to the financial instruments that are kind of spurring up in the Web3 space.
Yeah, so maybe I can add some nuance to the education part. So if we had 10 times more good assets on the platform, we would do 10 times more loan volume. So the lending side is not an issue. The lending side is sort of solved. There's enough people who want to make these returns, and so that there's a consolidation happening on our platform. There's very, very powerful players in there that want to deploy more money. So we're really focused on the borrowing side and how to educate folks about these possibilities. And we've realized, like, first, we're not the best people to do that, and we also don't have the bandwidth to do that. So what we did is we created this ambassador program, and this was super powerful. I actually didn't know how well this works, but there's like folks out there who are some of the most sophisticated lenders and borrowers, and they're like super excited about contributing and being part of that. They obviously also kind of going to become sort of the core pillars of the DAO that we're also trying to build. But yeah, so they moderate our Discord. They go out and educate folks. They come to our spaces. So we scaled via an ambassador program, and that's and that was very successful. Another thing that we did is we quite systematically approach activating NFT projects. So we have a Streak pipeline. If you use Google Streak, like a proper key account management, where we kind of like look with a script kind of what kind of NFT projects have the thresholds that we think NFTs should have to make good collateral. So we have a system about like what is good collateral, right? And then we sort of systematically find out about these, systematically contact them, iterate over value propositions across different user personas that we think are present in these communities, and then we go there and tell them what's up. Yeah.
Just have to correct myself. I said I'm quoting Sam Altman, but I didn't mean Sam Altman from YC. I meant Sam Bankman-Fried from FTX. It's not like I agree with everything, but with that particle thing, I think I'm in agreement with.
For sure, and I think we have a few minutes left, so I just wanted to kind of like look back and reflect. You know, Jonathan was mentioning how in 2 years ago the market was so small, and now it's still small, but obviously it's grown a lot with projects like NFTfi doing 8 figures of volume per month. With that being said, what's like one valuable thing that you guys have learned about the NFT market in general in the past few years?
You don't have to think about this, but yeah, there's so thing that I would say I've learned is like kind of the variety of perspectives, like talking about like NFTs. Like obviously, the NFT art is like driving the majority of the discourse, especially lately. But to me, like NFTs are literally just a token standards. I mean, like it's just like it's literally like a plain token, and the semantics of that like then comes with the use case. It can be the art, it can be anything, and there is like a huge gap between I guess the retail understanding of like what an NFT is and kind of the technical understanding of that is. And yeah, and there's a lot of confusion coming out of that factor as well. So kind of just realizing like there are a lot of new people entering the space. And realizing that, well, yeah, I mean, as you guys mentioned, obviously, like educating people about it, like the terminology, or just making sure that we talk about the same thing. As obviously, I'm not super empathetic. So that was my big lesson learned.
Yeah, something that just blows me away nearly every day is, just how insanely early it is. Like, it's actually insane. What's something fascinating is that, it seems at the same time so immersive. Just this side of crypto seems like a world, in its own right. But what's interesting is that, I remember back from, my 2017 days in crypto, and those days, just crypto felt equally as immersive. And yet, today, like, it's evolved, so much that it seems, it's hard to believe that it was just a couple of years ago. And, just working on these problems. And by the way, like, NFT finance is very tough. Like, that's another thing I learned is, like, building these things it's just so hard because, there's so many key, crucial pieces and crucial theory, crucial, like, it's just so early that, like, there are many hard problems yet to be solved. And yeah, that's just something that I didn't know it was like this, because, like, it's very easy to get caught up in, like, the existing complexity and the just existing degree of, like, immersiveness. But again, things are going to be very different soon, and the reason for that is that, like, we're just insanely early in this whole journey.
Yeah, I think one takeaway for me is I think balancing learning from the traditional industry and, like, looking at things in a totally different way. I think one good example came up in my dinner discussion with Chris from Goldman Sachs yesterday. We were talking about how, like, user analytics can be used as, like, a credit score equivalent in the real world. And while that's partly true, but there's a lot more that we can look at in terms of NFT data, right? Like, we can actually look at, like, how early they are in their like, financial journey, and then whether they are, like, flipping or, like, hodling, or whether they're using the fund that they've gotten from the loan to do other things. Like, we can actually track all of that. And then I think we're not fully leveraging the potential unless, like, we're actually looking at the full picture and then leveraging the unique potential that this industry gives us. So I think that's always, like, a reminder for me to, like, make sure that I'm actually, like, looking at things in a more, like, organic way that way.
I think the stories of real users, and we've all experienced that, I think are just super powerful, right? So if you can conceptually understand what NFTs do, for the industry in different industries, but if you have actual people, like, telling you these stories, and they do, it's quite powerful. And I think maybe also in these dark sort of times when we look at the market, it's important to remember that the thesis about NFTs and the value creation potential in these different verticals hasn't changed a bit, right? And so I think, and we see that also in the loan environment, right? So as I showed yesterday, there's the same amount of people, even more, like, taking out loans and giving loans. It's just that the assets are worth less, so the volumes are down. But, like, nothing has changed regarding the underlying fundamentals, I think. So I think we should just dig through, and we're going to come out strong on the other side.
Awesome. Well, I think that wraps it up for us. So let's give a huge round of applause for you guys for joining today.